All right, so I'm gonna do a raw video, completely unedited, showing you guys how I turned $600 into 2,800, the exact strategy I did, as well as how I did the options, because I did it in a very specific way, atypical to how I previously have done them. And I want to kind of break both of that down for you because I did it in a way that's unconventional, but I think it could really start to work. And so I've done small account challenges in the past. This was the one I actually did back about a month ago, a month and a half ago. I didn't even post about it really. You can see I just posted on Twitter because I wanted people to see if they really wanted to learn about it. The only other small account challenge I've done was way over a year ago. I made a video on it, turned 2,500 and 10K. The main reason I don't do them anymore is just because I find that I may as well just trade my large account. Why would I even worry about a small account? But I found a really cool way. It's really interesting. It's a way that you can essentially reduce your risk, not have to worry about a stop loss, especially if you're someone who's an emotional trader. You don't have to worry about the emotional part at all, really, and you can still crank a ton of profits from it if you do it right. But it's very important, very key risk management plan and strategy along with it too. So I want to dive into the kind of how I played the options themselves and how I went going about the account, and then kind of dive into the actual strategy part. So it's going to be a complete guide. I don't know how long this will be, but I just want to go ahead and break everything down for you guys. So let's get into it. So now, as you guys know, how I typically run accounts, okay? My main account typically will have 30K in it. Sometimes I'll keep it around 50K depending on if I'm trying to size up, compound, you know the drill. But I have 30K in it, and so typically I risk, anywhere from about 2 to 3% of that. I always have a stop loss in every trade, always have a target in every trade. I'm very aware of my risk management, how much I'm risking on each trade, how I want to go ahead and essentially do the trade with my risk. Now, the reason, I'm going to pull up the whiteboard actually here, kind of show you this. The way that I did, this other account is a lot different. So I did it very similar to a VC firm. So if you guys know how a VC firm works, basically they just invest a little bit into a lot of different companies, and they expect them to go crazy, go 10, 20, 30, 100, 500x, right? And so I kind of went about that the same way with this. So let me show you kind of a breakdown. Like let's say, for example, I had about $1,000 in my small account, okay, $1,000. How that I would play that, and I actually did play it like this for the small account. I had 600. I did it, so I'll show you right here, right? You could break it up into 4 trades that you put $250 into each. For this one, small account, I did $300 with 2 trades. Definitely more on the risky side, but we'll dive into that. And essentially what I'm doing is I'm banking on the fact that, I'm going to take 4 of these trades, right? All the same setups. I'm going to break down the setup later in this video, but I'm taking 4 of these trades and I'm basically doing not necessarily lottos, but I may not be getting the same week expiry, but I'm getting 1 to 2 weeks out. So either the same week or the next week out, maybe the 3rd week out as well. And what I'm doing is I'm basically letting them go bust or expecting a huge move out of them, right? So if we're taking a look at this, if we're taking 4 different trades, 2 of these are going to go to 0, right? Maybe 3 of them go to 0. Maybe 1 of them goes break even. And then maybe one of them, this trade, ends up going 5x, right? Which in this case would be, around $1,200. Yeah, $1,200. So let's say all 3 of these go bust. This one goes up 5x, 500%. That's $1,250 gain. I end up profitable, right? I start the account with 1,000, end it at 1,250. That's a $250 gain. It's 25% gain. Now, if this one goes 10x, that's a $2,500 gain. Okay, out of a 250 into 2,500 in one trade, that's a 10x. And 10x is actually literally what I did on Lily on this small account. You can see this was one of the contracts that I had. It wasn't even a weekly too; it was 2 weeks out. The Lily 580 call got in at 120. They were sitting at 1548. It's 1,000 over 1,000%. It's a 10x gain. So it's kind of how I played it on this one. And I'm gonna break that down for you guys as well. But this way of trading opens up a whole new door because essentially I'm not worried about my stop loss. I don't have a stop loss on these trades. I let them go to 0. So I can get in, not have to worry about the trade. The emotions are completely gone. I can just set alerts for my target at a 5x or 10x return depending on what target I'm looking at. And so you start getting a little crazy because you think about it. You're only giving yourself 4 shots to hit a 5x or 10x gain, which is definitely tough to do. Okay, I'm not saying it's easy, especially with the strategies I have, but I'm saying it's doable. And this is a new method of trading that's atypical to the typical, put 10K in an account, risk 1% of your account. It's like, okay, what if I risk 25% of my account per trade? What if I risk 10% of my account per trade and just go crazy and hope that one of them hits 5 to 10x? It's doable if you're trading options in the right way, because options, for you guys who trade options, you know that you can make a lot of money from them. As you can see, Lily made 10x on a next week's call, right? It wasn't even a weekly option. It also wasn't even that hard. You just have to get in the right time and understand how to read a chart and take advantage of seeing those big moves. Okay, because I took a few other trades and a lot of them went to zero. Lily was the only one that actually made me profitable, and it allowed me to grow my account quite substantially. Okay, so doing it this way is quite different than how I typically would, and I want you guys to take away that if we're taking a look at, if you have a small account, now first thing before I get into that, it's really important. 4 chances, like I said, is too little, right? If I were to go back and do this again, a little bit more safer. I only did it with $600 in 2 different trades because I had the money in the account and said, why not get rid of it? If I were to go back in the future and I had 1,000, I'd probably do it 1 to every 10, right? You want to have about 6, 7, 8, 9, 10 different shots to allow that 10x gain or 5x gain to occur. Maybe you get right on 2 of them, ends up working out for you. So how did I actually end up doing this, and how can you do this is the question to ask. So let's go ahead and dive in. Now, like I said before, I've only done 2 other small account challenges, okay? Obviously I've done a lot when I first started. I've been trading 6 years. If we take me back to when I first started, I was blowing up account after account because I simply had no risk management. I was trading this way, where I'd put 5K in account, 2K in account, risk 1 to 2%, and I'm just getting emotional and then blow up the entire account. And so what's cool is trading this way, you still can blow up the account, don't get me wrong, but the odds of it are less likely if you're trading in a way where it makes more sense. So take a look at Lily. This was essentially where I got in. I caught this move here, okay? So we can dive into the strategy aspect. We cover the risk management if we have a 5K account, I may put $500 into 20 different trades or 10 different trades, right? If I may put 1,000 into 5 trades, right? Now, so we cover the risk management, cover the emotional part because you don't really have that. And then when it comes to the strategy, we can go ahead and dive into that. Now, this was the move I caught on Lily. All right, you can see had a crazy move actually, 450 all the way to 550, and I believe I got in on the 5th. Actually, let me double check. I can see when I got in. Bought on the 5th and got the expiry 2 weeks out. Okay, and I believe I don't know when this was taken. So I got on the 5th, which is right here. This candle had a 1-day consolidation and just took off. So you can see I had 1 contract that I held for a 10x gain, got out others at around 5x, 6x, 7x. I was scaling out up into here as we started crawling up. But what essentially was the strategy? Like, how did I know this was going to squeeze at the right time? The answer is I didn't, right? All I'm doing as a trader is playing high probability setups that are in my favor. I had no idea that this was going to work out. That's why I went in with a small percent, risked 100% of the account. But a good kind of portion of it had to do with weekly ranges, okay? So weekly and I believe it's monthly ranges as well. So we take a look at the daily chart. What I do is I look for what I call balance theory, right? So price will a lot of times consolidate. You can see right here, price had this nice consolidation. And essentially how stocks move, and you guys are going to really see this when you just look at any chart. If I can go ahead and find my tool, 1 second. Where is the path tool. Price always goes like this. We may go up, may go for a bull flag or range, maybe range bound, whatever it is, not perfect. We usually get some sort of stop hunt. So we get a move like this, and we rip. Okay, very, very classic market manipulation. Happens all the time. You'll see price move up, have this consolidation, we get the stop hunt, and we rip. Basically what happened right here. Okay, so you can see price came up. I'm going to zoom in on a 2-hour chart here. Price came up. We had this nice consolidation phase, very tight channel. We had this little stop hunt right here. we ripped. Really simple, okay? So, first thing, knowing that price had a huge squeeze up on earnings, we ended up having continuation. There's a lot of people who are short up in this area here, and as price continues to move higher, we get the stop on here. When I see that, that's the key for me to now look to get into a long position, right? We get that stop hunt, we take out these lows, right? We call it a short trap, whatever it is. Everybody who got in long in this area here, okay? Everybody who bought in this area here has now gotten stopped out, okay? And so after we see them get stopped out, the institutions can load up. Remember, they're also selling in this area here, and they squeeze it higher all the way up to 600, the whole dollar level mark, okay? So really simple play. Got in here, scaled out some here, scaled out towards the top at 600. Now the key thing also is weekly ranges. People don't look at their weekly ranges that much, okay? This is really neat. So I use a tool called True Range. You go ahead and look at it on TradingView, and it shows you kind of the range of every single week. And you can see we can get pretty decent range extensions here, right? Typically, you can see the ranges will be around 17 points, right? Here. Kind of zoom in a little bit, just like this. You can see around 17 is a pretty good baseline, 17, 16. We tend to hit that quite a bit. And so coming into the week, if I'm thinking I'm getting 2 weeks out and we have a 16-point range times 2 weeks, that's a maximum range potential for about 32 points, okay? So if we're looking at options, we're looking at 32-point range in 2 weeks. We actually ended up doing that in like 1 week here. But the move to 600 was possible in 2 weeks. That's essentially what I was looking at on LLY, right? We've had a few weeks that I've hit a 32-point range. And people don't tend to look at this, but it's really cool because you can kind of see where your targets are going to be based on the ranges. So when we have that stop hunt, we have these 2 weeks of a pretty light range, 11, 16 points, and the next week comes out, I know that we can probably see a 19 or a 14-point range at the minimum, right? We've never really had a range below 14. This one was 11, but we know we can expect around 14 to maybe 21, and the highest being around 33, 34. We ended up getting that right around here, right? And so you can see, I believe which option I got. It's a 580 call, right? So 580, if we take our range from the week where we opened, so we opened on the 5th, right? Take a look from that low. The 580 call, if I look exactly, it's about 27 points. I got that 2 weeks out. So I was expecting that 32-point range to happen. Where did I get 32 points? Again, if our lower end of the range is about 13 points, multiply that by 2. Actually, it's 27, sorry. 27. Yeah, that's where we got that 580 level from. So we can hit our target within 2 weeks based off the range. Now, how did I know that price was going to go up? I didn't. All I knew is that we were consolidating. We had a stop hunt. And after we consolidate for a while, price typically tends to, go fast in one direction, whether it's up, whether it's down. I easily could have went down. I could have lost it all. But being on the right side of the play and using this strategy where we're going for these huge gains and taking, pretty good risk reward, right? I'm risking 250 to make 2,500, basically 1 to 5, 1 to 10 risk rewards. If we are right and we're able to calculate our weekly range, we can kind of figure out where stocks are going to top out and which options to get. I know that was a lot, but stick with me because it ends up making a little bit of sense, right? If we know our weekly range can really extend here and we have that whole $600 level, we can go ahead and take that shot. I can go ahead and get in. If I'm wrong, I'm wrong. I have 4, 5, 6 other shots to take because of the account side, because of everything else that I'm trading. And this happens a lot, okay? This type of trading is relatively new. Again, it's not typical of how I trade, but I've been learning this and I've been testing it over the while. And I think it's cool to share with you guys so you can go ahead and try it and say, if I have, $2K in my account, yeah, I could risk, 5% of your trade. What would that even be? If I have $2K in my account, I'm not the best at math, right? We're risking 5%, which is the max you really want to go. You're risking $100 a trade, right? If you end up at 2-3R in a certain week, you're looking at $203 a week, which is still good. Don't get me wrong. But if you struggle with emotions, what you could do is put $500 in the account instead of $2K, be able to risk the entire $500, okay, and then go at it a different way like this, where you may put 100, 200, maybe even $300 into a lotto and let it go 5, 10x, catch a huge move like this, okay? And the cool thing is you can get time on it. People don't realize this. You know, I got 2 weeks out and still made a 10x return. You can get a month out and still make a 10x return. People think you need to get same week expiry to get these type of crazy 5x, 10x, 20x plays. You can get them a month out. So all you have to do is really be right on the direction, hold it for enough time, and you don't have to worry about a stop loss because you're letting it go to zero, okay? And if you think about it like that, and think about the type of move, the type of money you would have made on a trade like this, you know, on a move like this thing squeezed like crazy. Or if you caught earnings, right? There's a million ways you can play it. But looking at the true range, looking at the actual range of the weekly chart, using that to your advantage, and kind of understanding, okay, if I look at LOY in a longer time frame, we typically will always get a range of about 12, right? There's maybe like 1 or 2 weeks we were lower. We'll typically always get a range of about 12 to 16. So if we're only 2 days into the week, this isn't the best example because we already hit a decent range. But let's say we're 2 days in a week and we only have a 4-point range. We know there's a good chance we're going to see another 8 points by the end of the week. So we can get an option that is the same week's expiry, expecting another, 8 points or 6 points, right? That was a lot, but hopefully that makes sense to you guys because I'm thinking of doing more small accounts. I want you guys to leave a comment down below if I should. If you guys see, like, you can go ahead and watch my other video. It's from 2,500 to 10K. Again, this was the other way, where I went very proper with my risk, took it very slow, very steady, and 4x the account in a month. Whereas this one, 600 to 2.8K in a day, was pretty crazy. So hopefully this makes sense to you guys, you know, because I want you guys to kind of understand where I'm coming from in this trading and how I'm kind of looking at small accounts different than typical and how you can use that in your advantage for your trading. So if you guys did enjoy, I want you to go ahead and click that first link in the description. I made a free training for you guys showing you essentially how I trade, call it my 3-phase system, and I'll break that down for you in that video. But other than that, hope you guys enjoy. Make sure to leave a like, subscribe, comment down below. I'll see you guys in the next video.